Hi everyone. I've been CEO of First Associates for roughly 6 years. I think when I started I didn't have any gray hair, more like Jeremy over there. Not quite as blonde. You're working on it. You'll get more, don't worry. So I do want to say that although I also heard that we got this room from the people at Meetup, which I thought was very nice, what Larry didn't mention that this is actually Brian Korn's office. And we just took the desk out of it. And that's where we're at. Also, Larry, I know you thought that was humorous, but I noticed at the very beginning of your talk that you didn't seem to know whether LA was north or south of Carlsbad. For those of you who don't know Larry, he's from New York. So at the time I've been CEO of First Associates, we have roughly doubled. Haven't just doubled, in those 6 years we've doubled every year. So we have had obviously quite a challenge scaling. It's been great. It's been a wonderful ride. A large part of that has been due to marketplace lending and the growth there. We also participate in many of the traditional markets. And it's been great. First Associates does loan servicing. We are the primary servicer on many programs, whether it be captive finance programs for Yamaha or more traditional marketplace lending programs like Loan Depot, things like that. We're involved in many securitizations, both as a backup servicer and a primary servicer. So obviously we do backup servicing. For those of you who don't know what that is, you can ask us about it after. We provide a number of ancillary services along the lines of custodial, document verification, these types of fund management type of exercises. And we do that across the United States and Canada and several of the European countries. We're actually, this year, we will be moving into the UK. It'll be our first year as a licensed UK entity as soon as we get the licensing done, which we're very excited about. So it's been a long 6 years, but it's been great. I certainly have noticed in the last, say, 3 years, one thing has happened, which is that marketplace lending has basically eaten the world. You look out and you see Prosper, Lending Club, Loan Depot, Funding Circle, whoever, you say, well, look at that. That looks sexy. That's cool. Look at that model. It's a wonderful model. But if you look a little deeper inside of what's happening on the traditional side of the fence, take, for example, Thunder Road. Thunder Road is a client that does consumer loans for motorcycles. We actually just did a securitization with Thunder Road in this environment, yes. First time issuer, A- rating, we're the primary servicer, great company. And you look at their setup, and you would look at their setup, and you'd say, well, how come no one calls that a marketplace lender? Because they have a third-party origination platform that they use, same one many marketplace lenders do. They use us for servicing and custodial arrangements, just like many marketplace lenders. Their whole back end looks very much like a marketplace lender. What's different is, one, they have a dealer network, right? So they've got a dealer network of motorcycle dealerships, which is great. I love motorcycles, so this is one of my favorite clients. And they don't call themselves a marketplace lender. But it's not really about the marketplace, it's all about outsourcing. And all we're seeing in lending, in consumer financing as a whole, is exactly what we saw in the automotive industry, what we saw in the computer industry, as this wave of outsourcing takes over an industry, and players who previously were vertically integrated conglomerates, whether that be IBM or Chase Bank, become a value chain aggregation of these horizontally focused players, whether that be Intel or First Associates or Orchard or Brian Korn. And that's been an exciting thing to witness and an exciting thing to go through. And I'll just touch for a moment on what's happening in the market right now. Right, this is always topical. So how many people here were at the S-Day, at ABS West? Anybody? Well, I know you were. So at the ABS West, which was in February, there's a lot of doom and gloom in the market. This is when the chai deals had that issue with Moody's and this type of thing. Doom and gloom. Everybody running around the conference and saying, have you seen delinquencies go up? What's wrong with the market? All this, right? But nobody could figure out what anybody was talking about. It was all kind of media overlay. But over the next couple of months, we saw capital sources tighten, right? The securitization market tightened. And we saw that whole dynamic that's still a bit of play right now. Then Lendit came about, and that was only a couple of weeks ago. It feels like it was just a couple of weeks ago. And at Lendit, you had the same kind of layer of gloom over the top in terms of media coverage, in terms of kind of cocktail chatter. But I think what many people didn't see, and was anybody here at London? How many people here went to London? So more. I think what many people didn't see, who even people who were at the conference, was this incredible frenzy of deal making underneath that little layer of gloom, underneath that film. We certainly had a great London event. Deal flow was very strong for us. I've talked to many of the other service providers, many of the originators, same dynamic. Companies are resetting to new capital sources. The securitization market is starting to open up. We've seen Avant go out. We're on that. Avant's one of our clients. We're on that deal. This motorcycle deal go out. We see other securitizations lining up. And the chatter that we hear from capital providers, whether they be private equity funds, or whether they be debt providers, the private equity funds basically aren't really taking a stop. They're just kind of continuing on their merry way. The debt providers are generally looking at it as an opportunity to possibly pick up some bargains. So there's a little bargain hunting. There's generally a belief that it's a couple months affair. The VCs are in a bit of a panic for the most part, but they're VCs, so I suppose that's okay. And it's very interesting now as we start to come out the other side of that, we see all those capital flows starting to loosen up, deals starting to consummate, warehouse providers coming in where securitization tightened up, securitization beginning to loosen up, and the forward flow funders are all starting to come back into the market as well. So that was an interesting 2-month hiatus, but it's probably almost over. I'd be interested to hear if anybody has any opinion that would be different than that, but I think that's a good place to start from. I think in the coming year we will probably have a few companies go out, and that will be good for the industry. We'll have more of the stronger companies will become stronger, and some of the weaker companies won't be there anymore. So I look forward to seeing you all at the next London, when assumedly we're all the strong that has gotten stronger.